Hey everybody, I'm back today with Jeff Miltenberger from NFM Lending, and we're just going to talk about a few things about the 2020 market and where we're at today. It is November 18th. Jeff, what is our update for where the market's at and interest rates?
Well, it's getting better. The market has been floating down a little bit. Interest rates are getting slightly better right now, so it's a great opportunity out there for both refinances and purchases. One thing that we discovered in the market, not discovered, but what happened on Monday was that right now rates in general are low because the Federal Reserve is buying the market. They're basically spending billions of dollars per day to buy mortgage-backed securities, which is pressuring rates lower and lower. That's why we're at record low rates right now. They've been buying about $4 to $5 billion a day in mortgage-backed securities, but they've been focused on the 2 to 2.5% coupon, which is keeping rates around where they're at right now, just under 3%, 2.6, 2.75. Now, what just happened on Monday is they switched their focus from that 2% coupon mostly to the 1.5% coupon. So the idea is they're trying to push rates potentially even lower. Surprising move. We didn't see that coming, but it's good news for people that are looking to buy and refinance that there is a good chance that this trend that we're in right now could continue definitely not only to the end of the year, but potentially all through 2021. The Federal Reserve did mention that they want to keep rates low as well. So great news on the rate market, that's for sure.
Yeah, so that brings us to the next question of, is it a good time to buy? And in my opinion, it's the best time to buy because your money is working for you right now. Money is almost free at this point to loan because we're looking at rates as low as 2.75, 2.5, and I don't even know how much lower they can get. But yeah. I mean, at a 2.5% interest rate, why not, get a mortgage and go buy something? Your money can stretch so much further. You have so much more buying power now than you did before. You can qualify for more because the interest rate is down, your payment is down, and so you just have more money to leverage going into this crazy buyer's market. I know my buyers are always concerned about, well, are we going to overpay for the house? We're going to pay a top premium for this property. And that's just not the case. The thing is that, yes, the market is going up and the home values are increasing, but the market hasn't had a chance, it's moving so quickly that home values haven't had a chance to level out with where the market actually is. So people think that right now when they're paying $20,000 or $30,000 over asking price, that they're overpaying for the property, which actually isn't the case because, like I said, the comps to the value of that property haven't caught up to where that value is because we're just going so fast right now. So it's just kind of amazing right now with the interest rates being so low and what people are qualifying for, how much more house they can buy. What can you add to that?
Yeah, the affordability is amazing right now. And, it, like you said, the low rates allow you to afford more of a house. And I keep bringing up affordability and that's what it's all about is like, okay, so if I have to pay over for this house today, why would I do that? And the bottom line is the reason you do that is probably more than likely if you wait 6 months or a year, you're going to pay another 5 or 10% more for that same house. So waiting is not only going to, cost you money later on, because who knows if rates are going to stay this low too, by the way. They'll stay low through 2021, but that can change in a heartbeat. The economy picks up more quickly or something like that. You could see rates skyrocket. It all depends on what's going on with the economy and how we recover from this COVID. Now that we're going down into another shutdown, for the next 30 days here, at least here in the Seattle area, and Oregon and California, that's going to have some impact on, I think, rates staying low. The stock market didn't like that. We saw a nice rally in the market yesterday. Today, the market's kind of flat, but again, that's pressuring rates even lower as well. I think these winter months too are an opportune time for a lot of people. There's not as many people buying during the holidays, right? Are you seeing a ton of people out there? Or are you seeing people like, I'm going to hold off until the first of the year?
I haven't seen any slowdown in the number of buyers that are out there. So, I mean, luckily for us, that's great. The one thing that is a downfall is there's fewer sellers. Fewer people want to sell their home during the winter months and the holiday season. But you know, if you are a buyer and you can hang in there and stick with it, and you don't mind moving during the winter and the holiday season, there's so many great opportunities out there for you to snag something. I think the buyer pool does go down, but not on my own personal buyers. My buyers are keepers. They're hanging in there. They're willing to do the work and just with it. So, you know, like I was saying, the affordability, back on that, a lot of people are worried about the overpaying. And the thing is that I think people aren't looking at both sides of the coin. You may be paying a little bit more for the home now than perhaps you would want to pay if, you know, in a perfect world, you could make up your own price. Because the interest rate is so low, it's making it still so affordable for people. So even if you're paying, you know, 20 or 30,000 over the asking price to get into a home, it's still so affordable because the interest rate is low. Everybody wants to compare what's going on right now to what happened in 2007, 2008. And it's not comparable because, again, we're not having a housing market crash. There is no bubble to be burst. And the interest rates back then were much, much, much higher with really, really high purchase prices. So right now we have high purchase prices, but those really low interest rates are keeping it to be really affordable for people to get into. So it's kind of a give and take. And you just have to work with an agent who can really help you, and a good lender who can help you determine for your situation what's going to be the most affordable strategies to get your offer and to win in this market right now.
Yeah, and we've been watching the market really closely, like that bubble that you're talking about, like 2007, 2008. One thing that wasn't really tracked back then that we're tracking very closely is the foreclosure rate. That foreclosure rate back in 2007 started to spike, and into 2008 went through the roof. And that's because people didn't have the equity to refinance. They had those higher rates that you're talking about, and the affordability was not very good back then. And then just take into consideration the foreclosures. Once the foreclosures started filtering into the market, that brought values down. Then people didn't have any equity left, and that would cause the bubble burst. In this market right now, which is completely different, it's a pandemic, not a financial crisis. And the difference right now is the foreclosure rate is one of the lowest numbers we've seen. It's 0.3%. And it's been that low, if not trending lower, since the start of this pandemic, mainly because of a lot of government assistance. People can go into forbearance and things like that. But the government is going to do anything they can to protect against another bubble. And on top of it, like especially in our market, we have such an IT-based market. You know, we've got a lot of Amazon and places like that that are COVID-friendly businesses. They're not shutting down. These are people that make decent money that can afford these houses that are out there, and it's going to continue to spurn the market on. I mean, Seattle market in general, Pierce, King, and Snohomish counties have been raging in value, going up to the tick of about last month. Seattle market was the number 2 market in the country, only behind Phoenix, and it was up 8.2% in equity. So a lot of people then say, oh gosh, well, the values skyrocket and I can't afford a house anymore. But in reality, that's not too bad. Incomes are increasing. The weekly earnings are increasing by 5.6%. So they're very close. So as long as earnings are increasing along with the housing value, people are going to continue to be able to afford these higher values. And I go back to what you say, paying more for a house. And I tell this to all my first-time homebuyers. I'm like, the biggest mistake a lot of first-time homebuyers make is they don't go after a house that they really like. They say, okay, this is my limit. I'm not going to go any higher. And then they lose out on it because they didn't go that extra 5 or 10,000 more and lost out. Then fast forward 3 to 6 months from now, they finally do that enough, lose out enough where they're frustrated. And then they get aggressive on that final house, which may or may not be their dream house. They already lost out on that. But now they're paying not only 5 or 10,000 more for the house over the whatever they have to do, but that house price also just went up by 8%, 5%, who cares? Even if it's 3%, they're still paying more on top of it. So they end up really hurting themselves financially by just waiting.
Yeah, no, I agree. And I think right now it is a little bit of a challenging time for a first-time home buyer, but you still have so much power as a buyer right now. And I think that's something that a lot of people are losing sight of when they're going out and they are a buyer because it's such a strong seller's market. They just don't feel like they have the knowledge to really be assertive in this market, which is what you have to do. They're qualifying for really great amounts right now because, like you said, the income is good, the interest rate is low, you can afford more in your budget and keep that payment at a really reasonable amount. And then for second-time home buyers, anybody who's looking to move up or down, they're just in probably one of the best positions they're ever going to be. This is probably the best market there is to be a seller and a buyer if you want to move up or move down, because you have all that equity in the house and you have cash. And because it's almost free to borrow money at this point because the interest rates are so low that you don't even have to take all that cash of your equity and the profit that you make in your home. You don't even have to use all that to get into the next house. And that's a huge opportunity for people to pay down debt, to pay off vehicles, to put into early retirement, to put into other investments, or even buy, a second home with some of the equity that they have into their house now as an investment property, or income potential in that way. And so that's another opportunity I think a lot of people are kind of missing the boat on because they're so overwhelmed at what a seller's market it is. If you are a second time or third time move up or down person, you want to downsize your home and take that equity, cash all that out, you can still get a really reasonable mortgage for more house than you have now, or in a retirement aspect, you can get a smaller house, pay everything off, and be debt free, and have a tiny mortgage payment. I mean, people are just, I just get frustrated because I'm like, look at the bigger picture. There's so much opportunity here. And I just want people to know the facts, because when you have the knowledge, you can make informed decisions and you can make smart decisions. And, real estate is one of the best ways to increase your net worth and, reach that earlier retirement. And so there's so much opportunity for people to be doing that right now.
Yeah, it's so important. It's one of the four pillars of building wealth, and it's one thing you have to do. If you already own, I agree with you 100%, then now is a great time. You're going to sell for a premium on your current house to make more cash. Yeah, you're going to pay a premium to get into a new place, but the new place is either bigger and better for your family, or the new place might be smaller and a downsizing situation. Yeah, you're going to overpay, but you also made more on your sale. So I think there's a huge advantage that way. And you're right. I mean, increasing your net worth is key. And then for you first-time home buyers or buyers out there that are, trying to come up with money down, there's still the first-time home buyer down payment assistance programs out there. Still USDA, which is a zero down program that's available in a lot of areas, especially down in your area there, Katie, where you specialize in that South Pierce County area. There's a lot of good opportunities to buy and not need a lot of cash out of pocket in order to get into a place. And in a lot of cases, if rents are going up, you're probably paying as much in rent, and you might be able to spend an extra $100 or $200 a month and get a house that you can own and start building that wealth and net worth that Katie was referencing. So great stuff, Katie.
Yeah. And right now rents are just going to continue to go up, and probably up pretty high here in the near future, because everybody's been able to have slack on making their rent payments, but these landlords still have to make their mortgage payments, and they've got to make up for those lost funds somehow. So you've been renting and you have been thinking about buying, get into it now before those rents become completely unaffordable, because you can get a mortgage 9 times out of 10 for a lot less than you're paying in rent.
Huh. Love it.
All right. Well, thanks, Jeff. I appreciate the update. We'll keep it short today. And if anybody has any more questions, be sure to check out all of Jeff's information. He is the savant in this area. We can't do business without him. So have a good day, everybody. And let us know if you have any more questions in the comments below.
Hey, thanks, Katie.
Bye.
Bye.